Happy Friday. Good morning. What a week. This running in place has just exhausted me. Man, just flatlining. Looking at the spiders here, just going nowhere yesterday. A little perk above the highs, you know, they'll slam down into the gap fill and right back up again. Kind of crazy. But we'll see. Maybe today, a little minor option expiration, and then a bigger one next week. So I hope we don't have to bear through another week of what we've been through as far as the markets go. Anyway, uh, until that the other expiration. But so look, it's poked up here. Um, well, I know it's good for credit spreads, but for the directional trades, it's beautiful. You can't ask for better for credit spreads, right? Just give me a market that doesn't move with premium on either side of it. But, so a little poke up there to new all-time highs, and it is, Steve. But me, everybody has their personal preferences, and unless it's a zero DTE, I'd rather look for directional trades, but that hasn't been, as far as the market goes anyway, that just hasn't been worked out since the market hasn't moved. So now today's high, not today's high, yesterday's high, yesterday's low, our first reference point of support and resistance. You can see pre-market here, things are holding up pretty well, buying the dip down into the support area. Light volume. I would say after the move like this, it's not supposed to dip down that far, but this market has been that way. I mean, look at yesterday, coming out of the blocks like a rocket and falling off the roof and back up again to pretty much end where it started the day. Right? Here's the open and there's the close. Pretty darn tight, just whipping back and forth there. So above here, obviously, there's nothing to stop it from going up, but how far can it get up there? We covered the open interest levels yesterday, and just looking at SPY, I had it up here. SPY, 424 is where it's at right now. Is big, and then 425 and 426 and 427. So there's that whole cluster up there sitting overhead, and down below, you've got 423 and different things down below. And as we covered earlier in the week, it's just got things in this relatively tight range. So let's see, maybe today, as these strikes expire, maybe a little later in the afternoon, let's see, as it starts to go one way or the other, maybe it'll move in one direction and then flip and go in the other direction. Right now, it looks like the initial direction is up. You can clear these highs, and we'll see how that all unfolds. So SPX, same range up there, and that's kind of relatively wide. And so I would say if there was premium up above that 42.75, let me take a look. Zero. Nothing. You'd have to go like 42.65. Yeah. And So really not that far, but the markets haven't been moving much. So kind of a personal decision. It's kind of tight. 73, 73, 72, 70. Yeah, I mean, if it pops up and then premium increases up there, sure. Because this is going to be a very tough spot to get through. And down below, you got support, but tight ranges. It is what it is. Weekly chart, you can see just a little tiny narrow range bar. The market's not moving. And we had one over here, high and lows, probably close to about the same. And then we just got this whip. And, the bottom line is, other than some of these whipsaws, just looking here over the last 7-8 weeks, it's 8 weeks or so, the market just isn't moving. It's stuck in the same place. All right. So futures, you had rollover yesterday and expiration is today. And you can see this is the current contract. The continuous one had a gap in it, so I went to this one. So right up near the prior high, buying the dip, buying this kind of breakout, I don't suggest it. This market has been pretty consistent at reversing after greater than 100% retracements. So far, buyers are in control. You got a constructive daily pattern. Yesterday had the whip. Is air up above. So it makes sense to lean or have a bias toward the long side. Pullbacks, and pullbacks, and we'll just see how high it might go. All right. And Qs, which has been leading. Yeah, of course, these are the futures. They're coming up to the top there, 14,000, big whole number. They've been pulling back. So SPY and the S&Ps have been grinding up, and this is pulling back here. So if things are going to move up, I would look at the NQs as a long trade, assuming that they hold this area and begin to turn around and possibly play catch up to the S&Ps. And there's a lot, I was, texting with Dan, covering some stuff this morning, and there's a lot of ETFs that have been rolling over, industrial ETF, materials, a lot of them. So we covered the transports, covered that it was rolling over. It's broken down under the 50 and it closed under these pivot lows. And so that's a bad sign. Markets can go up without it. I talked about that yesterday, but you got transports moving down. You've got interest rates now moving down. And all of those things are a short-term vote as to stimulus not happening, economy maybe not taking off like it was believed to have. So, and then we look at various ETFs, the sectors starting to roll over in alignment with transports. It's like, keep that in mind. We covered lots of trades yesterday that look good, like they can go higher, a lot of catch-up type of trades. But even the, what had been whippy and erratic, and we'll just look at IWM, they've run their course up toward the top of the range here. That doesn't mean they can't jiggle around, but there's just lots of things that are suggesting, keep an eye on the exit, be a little less aggressive, smaller position sizing, even with good looking setups. Is if all of a sudden we wake up and the markets are gapping down and all, whatever the news might be to ignite something, you're chasing the bids down, and better to do it with smaller positions. And of course, bonds are going up, interest rates are going down. Big turn from the way things were looking after this move down and this rolling over that looked like it was going to break down through this low, and we were looking for the 10-year for this bullish pattern to continue and flip up. And now that didn't happen, which would have been a positive from one point of view of interest rates continuing to move up and supporting, a bias of economy coming back and so on. And now interest rates breaking down and transports breaking down and materials breaking down. So short term, be careful. Tighten up the stops. And gold, just chopping sideways there. Oil, right? Just buying the dip. It's grinding up. We covered yesterday. I'm looking at the continuous contract that the next area of resistance was up around $75. So now that you've got these two bottoming tail bars here, and this would be applicable to anything we were trading with this kind of a pattern. This is where you'd want to move your stop up to, a trailing stop. Now that it's shown where buyers will come in on the dip, and that's been defended multiple times, so it shouldn't go back below there. Give you some QQ levels. All right. Well, you can see where they're at. They're right up into the resistance area. But it's kind of open air up into there. And so QQQ, you're the gamma guy. So I've got that 343 area marked off up there because that's the largest open interest from yesterday of 14,000. And yesterday, 340, stopped it right in its tracks. And so, that's about where it's at now. If it can start moving up, 344 should be, and up in that area should be a wall. And as that rallied up yesterday, looking like it was going to go to the moon, I mentioned to the room, watch this 340 level. And it went a little bit above, and I certainly didn't expect it to come all the way back down again. But pattern-wise, open interest-wise, information, that was certainly not the place to be initiating along. And it came all the way back and all the way back up again. So nice turnaround, but kind of crazy to go vertical up and vertical down and make its way back up. And so this certainly looks like it could go higher. It's just hanging out here, nowhere. Open interest at 50K at 33.40. Yes. So on the downside, the put side, 33.40, 33.40. It should be support. Now, just think about it. And here's my thought. We can't totally hang our hats on this open interest thing, right? Gamma, so on and so forth. There is support down there. Now, a shock bar and the potential to drive through that today would have been a gap under this red bar's low. That's not happening. And so there's no shock. Basically, it's an open that's a yawn. It's like this thing should be going up into here, and that's not happening. Now, it's hard to imagine. I guess it always is, prior to it actually happening, what would drive things to go down there? Well, the fact that this doesn't follow through, if this doesn't follow through and just hangs around here in the morning, what we say, it went down because it didn't go up. Meaning we have a pattern that is supportive that it's going to go up. And that means that the majorities created that pattern and their expectation is it's going to go up. And after a while, whether it's an individual trader or a hedge fund, patience starts to grow thin and concerns begin to grow that something's wrong. And then all of a sudden, it's like, who's going to blink first? Everybody's, oh, it'll be okay. It'll be okay. And all of a sudden, somebody starts hitting the bid and another one starts hitting the bid. And all of a sudden, it becomes a waterfall. But that would be a giant area if it should go down there in a climactic way, like, just falling down there fast. That would be the spot to look for a short-term reversal for some type of a bounce if it was to go down there. But at the moment, there's no technical reason to think that's going to happen, that it would go down there. Right. So we got lots of support here. And, yesterday's low area, it shouldn't go down there. And you can see that little cluster right there at 33.40. Well, you can see McGraw saying that's the main focus point, 330 for next week. And you can see this little bullish island reversal there. So that's next week. That's pretty far away. And there's a long distance from here all the way down to there. So let's see what happens here today. Of course, as to other things that have been deteriorating, look at the price of wood. So if you got all of these things, transports, wood, the only thing that's not cracking is oil, but materials and many others. So tech has been leading the way up. A couple of weeks ago, I said, hey, this is, a scenario for tech to play catch up. And that's what's happened. Russell played catch up. The S&Ps have just been hanging around up here. And so now that we have so many things that have reached their destination, right, technically, and we see what was leading is now leading the way down. And, our market internals a week ago said, hey, be careful. And now this longer term one, which takes a long time to move, yesterday poked its head above this area. And you can see the last time, nothing happened immediately, but we had a shock bar type of pattern and down it went. And then there was the recovery. But here we are back up here again. Shorter term ones reached that extreme last week. And then the equity one is up here. And it's getting late, so I don't want to do it, but I'll let you know. It's not something we look at very often either, but OEX option traders, who are considered supposed to be the smart money, they upped their bearish bets this week. So there's lots of things there that is saying this market is likely to have an accident. It just ain't happening yet. So we'll see how it unfolds today and into next week. All yours, Dan. Yeah, infrastructure, construction. Look at the construction ETF.
All right, good morning. Yeah, Greg, that's an interesting observation on OEX, what you're saying. Smart money doing it. And I think McGraw, didn't you say, we'll talk about it later, but McGraw told me something about a big VIX out of the money call purchase. And I was telling him that I disagreed on the month that they bought, and just the quick answer is because they don't move. If you're betting on volatility, buying volatility is very, very hard. Timing, and even if, let's say we get a crash next week, McGraw, we get a crash next week, and you're buying a September out of the money one, yes, it will go up, but nowhere near the amount you think if you had one expiring in 2-3 weeks. And we can talk about that later. All right, all our opens seem fine. Do you have any questions? ask me on this Sumo. Sumo was on our list yesterday. We're already in it, but to add, this daily chart looks fantastic. I see it gapping up a little bit here, pre-market 2180s, and 30 cents is on it. That's a lot. It's 1.5%. So I'm not chasing it, but it still looks very good. Getting put spreads. No, we never got filled on that, Frank. So I canceled it. Never got filled. UPST. We actually made our target on the 60s. And then I know we were looking at maybe putting on another one. And I said, let's wait for the afternoon, and had one of these topping tails, and I didn't do anything with it. But if you're asking me now, the answer is absolutely not, Joe. No way. Well, at least not now. And here's why. I know it's far away. 100 seems far away, but we had a breakout failure. We have a deep retracement. And look, we're gapping down $7. I wouldn't touch that unless we had a very potent reversal. And today is 0 DTE day. So let's be looking for those, both in the indexes, obviously, and anything that sets up, the usual things. Oliver's asking about Amazon bullish. What are you asking? Bullish continuation today, he's asking. Well, I did say in the green room yesterday, I did say that every single chart looks higher. Daily, weekly, monthly, beautiful, incredibly bullish 15-minute chart. So I said, yes, it looks higher unless the Qs kind of had a tantrum. As of right now, that's a bullish gap, bullish pre-market. Yes, it looks higher. I mean, today's Friday, so Tuesday was the ideal day to get on board. And I know some folks in the green trading room did. I put spread then, so good job. Playboy 40-30. How would you put stop on that? Didn't we talk about that yesterday? It's flatlined here in a downtrend on the 15-minute chart. I would put a stop under this pivot low and hold your breath, 40.72. Maybe leg into a condor. Let's look at a couple gappers here. I just saw this thing going by the ticker. So recent IPO, I haven't heard of it, Mike Quebec, but it's a beautiful 15. That might give us a day trade long. Bottoming pattern here, gapping up $13. We'll come back to you. Sumo, we talked about RCL. Cruise ships are coming in. There's news of, splattered all over the news. The RCL ship down in the Caribbean, supposed to be a fully vaccinated clientele, and 2 people got corona. So, they're going to be in the spotlight. The cover of our local section here in Fort Lauderdale, there's a cover of a big, beautiful RCL ship, brand spanking new. It's going to be sailing out of Fort Lauderdale here next month. MX, $27, big gap, but excessive. Nothing to do with that. BBIG 506, gapping right there in the middle of that ugly bar. Then resistance to the left, got no interest. Chris, hey, detective. Chris, breakout failure here, gapping down. A very bearish gap. It's like junk to me. Run, bottoming pattern. Let's keep an eye on that for put spread, TAN, the sector. We've been watching to see if it would hold, but Yeah, we just don't trust this turn right here. Gray. Gap breakout. Let's keep an eye on that. I'll put that on the bottom right here. Oh, ARKK. This was on our list from yesterday afternoon. If the market was gonna have a bullish run into the afternoon yesterday, this was gonna be one of our go-tos. It's gapping up. Jets. This was a breakout failure and transport's acting horrible. So if you're in anything jet related, I'd be careful here. Actually, back to one, shorted LUV yesterday. Compare consolidation here, price void on the weekly, that looks lower. Greg showed you the IYT here. That would have been a nice short had we done 30-minute low yesterday. That would have been perfect. I mean, look at this. These are perfect. You have so that these two dotted lines is the wide range breakdown bar. Yesterday, it poked up, topping tail, bearish engulfing on support, and then the bottom fell out. So that is beautiful 30-minute low trade yesterday. Using the intraday entry, trading the daily breakdown. And Pergo. Oh, I got it. McGraw, I got to share this with him. I'm going to do it really quick. Greg, you're going to, I mean, it's just going to make you throw up. Are you ready for this? So weekly chart, Pergo, bottoming pattern, wide range igniting, bullish 1, 2, 3. That is the place to buy Pergo. McGraw sent me something. Some friggin' idiot is saying buy it over $60. Weekly breakout. Are you all shocked? I mean, McGraw, I'm a little bit mad at you, McGraw, because I surely hope, because you're wasting your time and money listening to a friggin' clown like that. What, Greg?
Doesn't make any sense.
He showed it to me. The clown said major weekly breakout over 60. We should have bought the 1, 2, 3 and then give them liquidity. We'd sell it to that clown.
The FX is moving above recent highs here. My alert just went off, gapped up a little bit. So
Which one, MX?
the FX, Colfax Corporation. We were looking at it yesterday. We were talking about it being a grinder.
Yeah, that does nothing for me. Right.
No, not EFX, CFX. Charlie.
Yeah, much better. Yeah. We were watching this. This red bar was a 1, 2, 3 Tuesday or Wednesday morning, and then it had a deep retracement, so I deleted it. Let's see here, YouTube. HL and Aver. HL. Yeah, that's a Hilga mining silver. It's all going well. Aver, we're already in. You can add over the highs. I think it's a biotech though, be careful. And DISCK, yeah, that's a bear 1, 2, 3. You can short the lows. Yes, no, I posted in the weekly options trader. Let's keep an eye on that for a 0 DTE. So I'll put that in a window.